What do we see as the key opportunities in 2021? Well, firstly, at the end of this year is a very important United Nations summit held in Glasgow to really bring countries together and strengthen their commitments under the Paris Agreement to tackle climate change. So we expect lots of countries to introduce new policies and initiatives to increase the pace of their decarbonisation, and that should be a catalyst for action right across the climate change theme. In terms of investment opportunities at a sub-theme level, we think that the interest is going to shift from 2020, where it was all about these energy sub-themes. Actually, as the economy reopens up, we think that sustainable food and fashion, sustainable consumption will become a very powerful theme. We also think home renovation, there's a huge need to increase the energy efficiency of housing really right across the world, and to decarbonize heating, so switching from boilers to more electric or even fuel cell driven heating. So we think that will be a major theme this year and in the years ahead. The major risk we see for 2021 is actually valuations. After very strong performance last year, valuations across a number of sub-themes like clean energy and electric vehicles are now much higher. And we've already seen the impact of that in this year-end reporting. Companies that were not able to meet those high expectations have been treated quite harshly by the markets. So we have become more concerned about valuations in areas like clean energy and electric vehicles, and we've been reducing our exposure to those themes. And that continues to be the major risk that we see ahead, is really some digestion or consolidation needed in those parts of the market. How are we positioned to capture the opportunity we see ahead? Well, as I said, we've been moving our exposures towards some of these sub-themes around sustainable consumption and home renovation. We have made the portfolio more cautiously positioned with regard to valuations, as we expect it to be a more up and down year in 2021 than the one-way street it seemed to be last year. So we've only focused on companies who have clear competitive advantage and real leadership in their field, strong cash generation, and we're very conscious of the multiples or the valuation that we're paying for those companies. We still have huge confidence in the theme in the long run. We just want to be a bit cautious about some parts of the market where there's clearly been a lot of exuberance, and that has led to us to become a little more cautious there.